Hey, what's up, guys? Sam here, and I'll be doing the premium video for Friday, July 7th, 2023. So, as usual, just finished wrapping up the premium video for the folks in the gold room, and it was kind of an ugly close here in the indexes. You had a very nice rally going there until midday, got up to about 44.40 on SPX, and then it closed actually sub 4400 on the day. I'm going to kind of cover the main point of the premium video with you guys because that was really the only thing that I think is really actionable that I see going into next week. And it doesn't really matter, in my opinion, what you're trading. I think this is going to affect you because it's index based. So it's going to be right here on the hourly charts. And this is something that we've been covering in the gold room now since Wednesday. And it's unresolved. So over here on the far right, you have that high there that I just drew in, and then you have this higher high, right? So price goes up between these 2 points. Why is the indicator going down from one point to the next? You see how it goes higher here on price but lower on the indicator? That's a negative divergence. Negative divergences basically just means that this high that was made, this secondary higher high, it's an unstable high. And if the structure starts to take damage, basically how it did at the close there, it opens up the door, and very often when you have a negative divergence like this, you'll see it come back down from where it came. So that would kind of put you back in the neighborhood of 43.40 if this starts to play out, right? So this is a really shaky pattern going into next week, and it's kind of market wide, right? Because it's an SPX pattern. So starting next week, I would suggest, or what I'll be doing, I'll say it this way, what I'll be doing is focusing immediately on the hourly charts and seeing if they can get back above some of these critical levels that they need to get back above, like 44.20, right? Because if they are unable to, and they take out that low from yesterday, that basically creates a vacuum right back to that hourly 200, right around 43.40. And at least so far, with this negative divergence in play and the sell signals that kicked in there at the high of the day, it's very shaky, right? So I think if if you're gonna be doing some weekend work, maybe prioritize the hourly charts. If you look at the weekly and the daily, there's no issues here. These are not particularly hot candles necessarily. But there's no structural issues here, nor are there any sell signals, etc., etc. So the main thing to focus on going into next week is going to be this hourly pattern, and then see if on your indicators, maybe you have different indicators than I do, see if you see the negative divergence here into the highs on SPX hourly. And also understand the key level here is going to be the low from yesterday. If that level breaks, let's just call it 43.80, I think it's going to snap you back very quickly to about 43.40. And then from there we'll have to make the next set of decisions. One thing that is really starting to lean in the bears' favor here is going to be interest rates. So this week saw interest rates go up very quickly and in a very large way on a percentage basis. And it really is starting to create a lot of structural damage to the HYG. So with HYG here, you had all of this attempt to bottom the thing and to turn it higher. So you had this attempt to bottom the thing over here in April, and you can see how the 50 period on the weekly time frame was sloping hard and then flattened out during this kind of really tight consolidation all through here. Last week looked promising for a breakout. You see that nice kind of attempt at a breakout candle, good volume, active signals from back here. But this week basically leg sweeps this particular instrument. So this week you see the gap down and basically closing at the lows, and in doing so it actually gives you a mid-level sell, and that sell right there is actually the worst one, because that's the one that kind of gets you going in one direction and then rips you the other direction, and you kind of get that whiplash effect to the downside. So HYG here on a bigger picture perspective leans very bearish at this point, and therefore the main things to be looking at next week are going to be interest rates, number one. I would have HYG as an internal You can look at it on a 15-minute chart. If it starts to go higher, everything's good. If it continues lower, you got to be very, very careful. So not only that, but then you have a high compression squeeze there on the weekly chart. And these high compression squeezes, these are actually the worst ones. They're the most likely to break short. So if you look at the combination of signals that are printing right now on HYG, that's pretty much as bad of a look as it could have. You have the leg sweep in price, you have the high compression squeeze, you have the bearish crossover there on the trend oscillator, and you have this devastating mid-level red arrow on the high-low, which is the worst signal that you can have. So to put a point on everything, I'm not really differentiating stocks here, although there is likely to be some level of rotation away from tech and into things like energy, materials, industrials, and financials. But if the SPX signal that I showed you at the beginning part of this video, if that fires short, it's going to take everything lower with it. So watch the hourly time frames. Understand that below yesterday's low, there's a huge air pocket. It's about 50 points to the next support level. And then bigger picture, keep an eye on that HYG weekly, because if that indeed fires short, and as it sits, this is the worst signal that I could give you, that's going to put a kind of a definitive thorn in the side of the market, to say the least. So stay safe out there next week. Watch those hourly charts. Throw up HYG as an internal. And we'll come back next week and check out how HYG is doing and see if we can come up with the next steps to go into the week after that. All right, guys, that's my time. Hopefully this was helpful. If you have any questions, drop them down in the chat. Leave us a like before you go somewhere else on the YouTube. It does help us with the old algorithm, and we certainly appreciate it, and it's free. And I hope you guys have a great weekend, and I'll see you next Friday. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.